one of the high-paying jobs in the US, at least, getting six-figure salaries, is prompt engineers. We can't hold back the tide of change, but for every change is also opportunity.
And I suppose from your side, how are you seeing AI sort of come into your business?
Even though we haven't gone over some type of finish line to say we now live in an AI world, it's there. Eventually you can see that people's jobs will be replaced, but don't panic about it. I think certainly the finance industry will find a way to adapt and stay relevant.
What advice are you giving to people about the politics and around capital markets like in this current environment?
It's set to transform, but not overnight. Regulators will never move as fast as tech can, but they are getting better and faster and more innovative. And I think that that's a key risk. As the saying goes, it's not AI that will take your job, but someone proficient at AI that might take your job.
Welcome back, everybody, to the Wise Wealth podcast. Thanks so much to all those listeners that have been tuning in. We are in the top 100 podcasts for the financial markets and the finance podcast in the UK and Singapore, and we touched it in Dubai as well. So thank you so much for tuning in, everybody. We've got an exciting guest on the podcast today. I'm going to let him introduce himself. We're going to hear a little bit more about the background, and then we're going to be discussing about the capital markets. So I'm going to hand it over to Ronan. Thanks so much for joining us on the podcast.
Hi, thanks, Sam. Well, look, it's great to be on. My background is that I've done about 3 decades in the bond market based here in London, previously New York for a short period, but transacting deals throughout Western Europe and many other parts as well. Since around about the pandemic, I came out and set up on my own as a capital markets consultant, driven in part by the 12 to 18 months before I left full-time banking. My clients across Europe, when we got to the small talk at the end of the meeting, started to ask me a lot about fintech. And I think I acquitted myself pretty well, but I too was on a big learning curve. And I realized that if I'm going to be relevant in the next decade and the one after that, that I need to really do a deep dive into fintech and related areas. So my company, Q4 Capital Advisors, it operates at the intersection, the way I put it, the intersection of capital markets and AI, following various courses of study I've done and various mandates I've executed for clients. But one differentiating factor, I think, for me is that I realized during work I can come on to that I did for the European Commission, that actually whilst a lot of what I do was highly relevant to banks embracing this new phase, how we do business in the city and the way that is evolving is also highly relevant to other industries and ecosystems, and is more takeaways than I think I initially realized, especially in things as opposite as, say, the nonprofit sector. And so, yes, it's been an exciting time for me in recent years, and I'm learning every day because this market is moving so fast.
Yeah, I suppose where you at currently, and I suppose what is it that you're working on project wise at the moment?
Yeah, I should. Well, a couple of things. One up front, I should declare my hand because I'll talk a bit about data analytics. I have a strategic collaboration with a terrific company here in London called Calamere Point. They are at least 15 years in the business of making sense of very fragmented data. Now, I know a lot of companies talk about data analytics, but Calamere boasts clients from name your investment bank, JP Morgan, Deutsche, HSBC, including LSEG, and nonprofits like World Vision. And what I'm noticing, whilst there's an awful lot of talk of AI and tech, there's still a lot going on in the old world of data analytics. So, for example, if you think of Lego bricks, to take us all back a bit, a lot of the solutions to data problems, because you might come across a huge organization that through mergers and various things ends up with 10 or more data reservoirs, and the data is collated in all different ways. A company like Calamere and its competitors have a lot of IP already built and ready that they can clip together to address it. But as time goes on, let's say there's 10 pieces in the chain, you might swap out one for AI because it does it better. And then in time too, and perhaps someday we'll get all the way along. So even though we haven't gone over some type of finish line to say we now live in an AI world, it's there. It's sometimes goes undetected, but operating in the background to augment and make more efficient processes that we already have. So, I mean, we could do a whole podcast on data, but I'll spare your listeners. But that's one area I'm very focused on at the moment in building new business with them. Um, I've always had, unashamedly, if you look at my logo, I have uh, a pyramid on it. I've been quite focused on Europe from the start. Um, I worked with the European Commission, as I said, for 2 years, trying to get a better result on philanthropy. Now, what a quick word on that, because why is that relevant? Everyone hears about the single market in Europe, um, and indeed it has its flaws, but equally a lot of business gets done that wouldn't because of the single market. But somewhere in the evolution of this space, they forgot about the philanthropic sector. And to put this in perspective, if a big say a big foundation like Siemens Foundation wanted to make an investment in a Portuguese olive growing company, they may well have to set up a branch office or a subsidiary in Portugal, go through an approvals process, and give the recipient, say, €20,000. If they wanted to make an equity investment, if Siemens proper wanted to make an equity investment in a Portuguese company, they just draw up a share purchase agreement, buy the shares, move the money. So it's really gummed up, and the commission wanted ex-bankers to take a look at it. I was the primary one in the philanthropy space, and by where I got to, because it was a long process, my final recommendation, I set up capital solutions teams for various banks to do hybrid. What I mean by that, it's a knowledge center, a hub, where you would put in position a bond market person. You might include a tax advisor. You might include somebody who's very close to the regulators. You would do things like this, podcasts, talk at conferences, raise your profile, and see clients continuously and keep so that when the big day comes, when you get clarity, and we saw this ahead of the evolution of green bonds, for example, then you're in pole position to get the business. So my primary recommendation to the commission was, look, this is a really gummed up economic space, but equally, there's €60 billion per annum recurring available to come from philanthropic donors in Europe to
Yeah.
various causes. And it's stuck within national boundaries at the moment. So the Germans support the Germans, the Norwegians, and so on. The hub would build a digital database to map the profile of all the givers and the profile, and it would also filter all of the worthy causes, and it would use a lot of technology, much like bankers bring borrowers and lenders together. I'm very pleased to see that after a long road, we got backing from the European Parliament, who put a seven-figure sum of money behind it. It then got approved by the Commission, and a tender process went out this summer, the results of which will be announced very soon to bring this hub to life. And the reason I tell this story is not just because I was heavily involved, but because it is the best example I can think of where processes, including new age processes with digital technology that began in the city, could hold direct relevance to something that couldn't be more opposite from the city, which is the nonprofit sector in Europe. And that's really where my business operates, in conference space, in commentary, in data
Yeah.
analytics, and other introductions. I work with entrepreneurs a lot as well.
How are you seeing the capital markets in London? Are you seeing the current environment being attractive? Are you seeing it stagnate? What's your sort of opinion on that?
No, I don't think it's stagnating, actually. I mean, there's obviously been a lot of worries about select areas, but I've worked for about 30 years in the city. Actually, it stems from a school trip when I was 16 to go and see the market, and so I used to take an interest in them from a distance also. One of the things, indeed, I did a LinkedIn post only today on it, if anyone's interested, but one of the things I've been hugely impressed with is the city's ability to turn on a sixpence. It is very good at confronting the obstacles and the opportunities presented to it whether it's new regulations, whether it's new tax regimes, a challenging operating environment, geopolitically, whatever it may be. Um, this is an industry that knows that to stand still is to die. You have to keep moving, and it's why you see big churn in employment. It's a cruel business. They let people go en masse if they need to. They deploy technology if it can replace somebody. They do all of these things. But what I often refer to is what I call the silently satisfied, and that is the companies from around the world that come back year after year after year to procure high-end, highly bespoke financial services. And if they didn't come back, it wouldn't survive. So the proof that it survives is that they do. They remain a bit silent. There's nothing in it for them to brag. But so I would say it's in pretty good health.
Yeah, so I suppose like the headline news of stuff, like we just seen the Revolut founder, he's just left the UK from a tax point of view. We've seen, I can't remember the companies, but there's a fair few big companies that were going to list in the UK that have now opted for the US. Have you seen anything like that as being on the ground in the raising space? Are you seeing any sort of talks around that?
Yes, I've mostly operated in the bond market, less so the stock market, and so the bonds will be listed typically on Euronext Amsterdam or somewhere, Frankfurt or whatever, because you want most of what I've worked on in Europe is needs a pan-European audience. Um, I think London Stock Exchange and the equity side is suffering. I mean, I saw a stat very recently that in the last 30 years, the S&P 500 um, rose by something like 1100% versus I think it was 100 and something for the FTSE. I'd need to check those numbers exactly, but certainly the UK is dwarfed by that now. That investors who list want to reach a wider audience. I'm straying out of my comfort zone a little bit here, but answer your question, yes, I'm hearing noise about that. Yes, I'm hearing people list on foreign markets. Yes, I'm hearing wealthy people decamp because of tax. But that takes you, the latter at least, takes you into a broader debate about Rachel Reeves's budget and where it's all going. I think the domicile of an individual company and certainly an individual entrepreneur has had no particular bearing on on the world that I operate in. It's too inconsequential. But yeah, it's pub talk.
Do you see, for example, Rachel Reeves and her changes in the autumn budget affecting your space?
Not really. I think most of the changes that are may or may not be coming will impact household wealth and individuals. But I think there's a lot of talk about creating a digital hub in Britain and all of that. And I hear entrepreneurs saying, "Well, yeah, we'll wait and see." Although there is a very exciting enterprise culture here. But there's nothing I can think of in the budget that will seismically change the areas I operate in, give advice on, and it's moving too fast, and it's by definition international, so it doesn't hang on the budget particulars of any one year.
Yeah. And I suppose from your side, how are you seeing AI sort of come into your business? What sort of strategic changes are people making towards that? And are we actually seeing any sort of positive uplift from that? Or is it just sort of a buzzword at the moment, just like what you were saying, just like it was fintech back in 2020?
Yeah. No, definitely not a buzzword. It's already impacting. Let me just cite a couple of areas. My main focus is capital markets. I'll leave that till last. The one, I think the one that's making the most noise in banking is wealth management. The wealth management is, to remind people, this is the part of banks that look after clients of high net worth, investing their money, family offices, other things. You can think of the big Swiss private banks, but big Morgan Stanley, these kinds of places. Um, Banks like wealth management arms to their business because it's not very capital consumptive. If you're lending money, you got to keep capital behind it. Capital is very expensive. Certainly, it's gone up in recent years. Whereas the wealth management business, you mostly make fees, so it's good business. Now, we saw in the States, I'd say, going back at least, well, the guts of a decade, if not a decade, a big rise among retail brokers, a move over to robo investing in wealth. To put it in perspective, Americans hold about 33%, I think, of their financial wealth in equities. In Britain, it's about 8%, and in the remainder of the G7, it's about 14%. So, and now the various quite slick platforms. There used to be retail brokers at the likes of Lehman Brothers and stuff in the old days, ringing doctors and dentists, but now people log on and they just put in their risk parameters, their age, their whatever, and the algo will just suggest a portfolio, and it'll rebalance it when you're asleep if you set it right and something kicks off. I was always wondering why I hadn't come to wealth management, which is still a very relationship-driven business, but it has now, and I think they've realised from onboarding KYC, know your client, to fraud detection, risk management, portfolio allocation, portfolio maintenance, all of these areas, the smarter wealth managers are embracing it. And I'll tell you a particular story which I was caught my attention during the past year was from UBS, who has created avatars for many of its star analysts, so that these analysts were actually were brought in, their profiles loaded up, their voice, their mannerisms, the whole thing, and they say it was in response to clients. They produced, I think, 50,000 reports per annum, paper reports on this stock and that bond and so on. And their clients were demanding more video. I think it's the age we live in, more video-based analytics. So analysts, like what we're doing, sitting down and talking about things. But even their studios couldn't accommodate the volume, and the poor analysts had to sit there forever being recorded. So these avatars, they can read the report, they can recount the report, they can attend conferences in other countries. So if there's a conference in Boca Raton and the actual analyst is in Tokyo, he or she can also pop up Boca Raton, give a very impressive presentation and move on. That's a really good example, I think, of productivity growth. If you go back to Rachel Reeves, actually, the one point perhaps I glossed over was Britain has an abysmal productivity record. It needs to enhance productivity. This is in the services industry. There's many examples of how that can be brought about.
Yeah.
That's wealth management. If you want me to just flag a few things in capital markets, going back to the origination, syndication, sales, trading. In my old world is origination. So I originated in structured bonds. Basic stuff, which is maybe not necessarily AI, but the speed with which you can put together a PowerPoint now and make it look good without things jumping around. I mean, when I was doing big hybrid capital pitches, which would involve mapping banks' capital over a period of years, running all their ratio numbers, playing around with spreadsheets. I could maybe do 2 or 3 of those in a week if I was operating full tilt, and then you have to find time to go and present it. I think now you could knock those out very, very, very quickly, and there's increased real-time analytics that'll update your spreadsheets for numbers as they come out. You can run so many functions and ratios and so on. So I just think that front end, you've the increased use of video presentations. I don't know how many air miles we clocked up in the old days, but that's reduced quite a bit. You have intelligent, as I say, the analytics. This, if you're launching a bond, that side of it can be done much more quicker. There's legal services. A lot of legal tech is taking hold to, we allowed about 6 weeks of legal draft coming into a hybrid deal, getting it ready. I'm pretty sure you can turn the first turn overnight now on what might be a very complex bond doc, and most of it will be done by robo. So there's a lot of ancillary service that perhaps haven't all come together completely, but they're there. If you look at, I've had a large investment bank approach me recently to talk about the automation of the syndicate side. Now that's where on the day of launch, say 800 million of bonds, you'll have all these salespeople focusing on different markets, lifting the phone and feeding into accounts like pension funds, asset managers, hedge funds, private offices, and so on. And then normally a good deal is oversubscribed, so the syndicate manager has to cut back the allotments. It's very labor intensive. You know, if you look at so many other aspects of our lives where preferences can be put in by interested parties and they're matched, it's very like what we're doing in Europe with the donors on one side and the projects on the other. We're going to have a filtration system, a bit like not unlike a dating website that will match criteria and bring interested parties together. That hasn't really happened in syndicate, but there's moves afoot. And then after that, there's a lot happening in the trading space. We've had algorithmic trading for years, but for example, HSBC teamed up with IBM recently, and they announced using quantitative computer technology. Um, I think it was 35 or 37% increase in predictions as to uh, for a given price, what would be the buy side demand for an asset. So you're estimating if we go in at this price where the demand will be and so on. And so there's so much going on at points on that value chain. But as I flagged, it's not all come together yet, but there's creeping innovation. But the cost reduction hasn't, I think, really happened because banks are still caught between the old world and the new world, and they might be reluctant to
Yeah.
take out whole, blocks of people just yet. But I do think it's coming.
Yeah, the legacy platforms is really where they're holding up. That's why all these challenges that are just coming through, flipping up a website in the space of a few months and launching their business are becoming more of a threat and more competitive. It feels very much like we're back in the challenger bank days of when Monzo and Revolut started, but just with AI. And these legacy companies have either got to acquire them or
Yeah.
they've got to try to put a load of money into trying to update all of their systems. I do feel though that we are lagging in London from AI side. The US looks like it's really developed it and
Yeah.
it's going leaps and bounds. And I feel like London feels very much like we're lagging. Like if we're to sit here today and say, what is a big AI leading business in the UK? I wouldn't know who to point a finger at in the UK.
Yeah. I think, you know, I think you're right on a few fronts. I think there's a lot of examples in AI of sorry, there's a lot of examples of Britain where the country is a follower, not a leader. I think there's a little bit of reluctance in the business mindset. But you know, I'm going to mention a company, Synthesia, which is the one that makes the avatars. UK company, as far as I'm aware, that worked with UBS on the analyst side. So again, I emphasize there's an awful lot happening behind the scene in the engine rooms, even in back office. And there'll be names I come across names and go, oh my God, I didn't know that company even
Yeah.
exist, let alone got an equity infusion of 500 million or whatever. Um, there is a lot happening there, but I also detect, in this when I was putting together the bank capital conference last year, I was also obviously involved in raising sponsorship, and I would talk to a lot of managing directors at big, well-known banks, and I felt it was bizarre because I was inviting these people to have a forum at a very well-attended conference. It was both bolted onto the Global Borrowers and Investors Forum in London, which is running well over 30 years. And I was getting a bit of reluctance. And then two managing directors at this one bank I won't mention said to me off the record afterwards that they're not going to be the change makers. That what they were really worried about was getting fired and protecting their pensions. And the penny really dropped with me. And I rebalanced the conference a bit. And I went out and I saw a lot of people, a bit like me, who were in banking but have moved into consulting or fintech or something purely on the basis they could speak more freely. And we got excellent feedback and very honest feedback of where things are at. Um, I think there's a little bit of denial in the big IBs. I think, the thing that allows the city to turn on a sixpence to challenges that I mentioned earlier also prevents it from taking a very long-term view. And that can be a problem. So if the next quarter, the next 6 months looks good, often they don't move. But I feel, won't be a retail bank like Monzo and some of those, but I think a highly innovative, maybe mid-tier investment bank. I have one name in mind, but perhaps I'll hold back on that just because I don't want to put them under pressure. But has that innovative mindset to kind of blast it all open in a particular area, and they will need that scary competition to start seeing wholesale change. I think the evolution in a protected market will take a lot longer than if we see an aggressive march in say bond distribution or you know the trading function or something central to the capital markets. And but it cannot continue the way it's going on forever. That is standing still is not an option. It just is not.
Yeah, I've always thought about this, and I thought that when AI and quantum computing combine, that's when we'll have real acceleration. We'll be able to solve so many different problems once them two combine. And I don't know if they have yet, but I'm sure it won't be long until they do.
Yeah, well, yeah, it's an interesting point. Not fully is the answer, no, but also with that in lockstep comes increased risks. The crims are waiting for quantum computing to unlock your passcode to your phone
Yeah.
and your bank and all of that. And this is something that is an operational risk for banks and others. I think, um, I'm a great believer in effective regulation. I don't think I know that it's a very big debate in that. But if you want an orderly marketplace and one that attracts investor funds, they want to see something that is a robust ecosystem. And I think regulators will never move as fast as tech can, but they are getting better and faster and more innovative. And I think that's a key risk. But I'm not. It's off my comfort zone to go too much into quantum computing as to how they would go about it or mitigating that risk. But it's a major positive, but it's also a negative.
Well, I suppose when you're doing it, you're working with people to raise capital, right? Are you seeing a shift in the type of people that are coming to raise capital? Is it more leaning towards the AI and tech side, or is it, still, I don't know, is it focused on traditional business? You tell me.
Yeah, well, I mean, I directly raise capital for 3 decades now. I advise. I'm not involved in directly raising, but what I am seeing is, let's take blockchain bonds. So I think most people may or may not know what that is, but that's bonds normally are distributed through a central repository like Euroclear or Clearstream after you've raised the money. And what we've seen a growth in digital bonds, blockchain bonds, I'll call them, where the bonds are distributed on an immutable, decentralized ledger, encrypted, and so on, and all of the using smart contracts. And that smart contract is uploaded to the blockchain. All of the necessary details about the interest rate and the maturity date and all of that will go alongside it. It's new technology, and so what we're seeing is I'm seeing a lot of issuers do this in the last couple of years as a kind of test balloon. So an issuer that might normally go to market for 800-900 million euro or a billion point five does 150 million. I mean, Siemens did a while back 60 million euro digital bond. Now, the reason they're not a client of mine, I've no direct dealings with them, but um, a client that would normally fund in much higher size, what's going on. It's the same as what the EIB did, Hong Kong authorities. It's think of it as a test balloon. The best way to understand the digital securities um, ecosystem is to do one. It's like your theory test on driving it, but you really only learn it when you get into the car. And so they're keeping it small, keeping it tight to fully learn. So the feedback that we're getting is that it works, the technology works, but there are problems merging it with legacy infrastructure. Some jurisdictions don't recognize digital securities, so you have to run a twin track approach, old bonds plus new bonds. Are they fungible? How do they knit together? Conventions like settlement, you know, the direction of travel is T plus zero. It's now, T plus two gone to T plus one. And then, so that like if you revolute your friend money after you have a dinner, your friend gets the money more or less straight away. That's not how it works in the bond market. Um, so there's a lot there, but what is really clear is the direction of travel. We're we're not pulling back from this, but you see the quality of the issuers are very high grade, um, like sovereign and super agency type clients. Some of them are very, very highly rated corporates, and they're paving the way. And right now we're in that dual phase. It's kind of like, you know, I don't know, certainly people of my vintage can remember the battle between Betamax and VHS in the videotape world, or Lotus 123 and Excel, and then you get a standard. So we're in that scrappy phase at the moment, trying to iron it out. But I've not come across anyone, including the conference I spoke at a few days ago, that thinks that, oh, yeah, it's a fad and digital bombs will go away. Quite the opposite.
Yeah, I think it's an interesting space. I think there's a lot to come. I suppose I don't want to get into it too much, but do you think politics will be changing the view on this? I've seen obviously Labour's not been looked in a positive light at the moment. And it looks like Nigel Farage is potentially up for being the next Prime Minister, which I don't know if is a good thing or a bad thing as of yet. But they're leaning quite heavily to try to make the UK a hub for entrepreneurs, a hub for capital markets, a hub for AI. Do you foresee that as a net positive or not?
Yeah, it's interesting. I mean, my company, one of our strands is geopolitical advice because in the markets the two are interlinked. So you
Yeah,
see, I was sitting in front of a bank of screens the day the Brexit result was announced, and they all went red and black. And so markets can get their head around anything, but what they do not like is uncertainty. They can't map it. No spreadsheet analyst in the world can take a really uncertain outcome and do anything with it. But if you said tomorrow taxes are 90%, they'd hate it on it. But they now have a hard number to work with. So um, the uncertainty of Britain's kind of trajectory in the next 4 years is not helping.
yeah,
The legacy of the Liz Truss budget, which was an act of very amateur analytics and understanding of the international capital markets, hurt Britain's standing in the world, which was long earned, and we're not over it because you feel it could happen again. And for all the talk Nigel Farage might give to deregulation and slashing taxes, and everyone goes, "Oh, it's a great business environment." If it isn't costed and it doesn't sound believable or practical, the markets will shun it. So you might actually expect, as his numbers rise in the poll, the premium on government bonds rises in lockstep because they don't like uncertainty. He hasn't been in government before. He's got four MPs, and I think people would be rightly nervous. I'm just talking about the stakeholders in the markets now, not individual households. Will be
yeah,
rightly nervous to put a premium on what's coming after if he came to power. And for all his uh, grayness, shall I say, Keir Starmer, that he's a man who is somewhat predictable, moves at a steady pace, maybe not as much as people would like, but I think actually that's the kind of operator that the markets sometimes take to. They're often lending money way longer than the lifetime of any one government. So, the sterling bond market goes out to 30 years. So, it's not all about what the zeitgeist is today.
yeah. No, I agree. I mean, that's why I suppose the markets actually did have a huge rally off the back of Labour winning, didn't they? Because it was confidence that
Yeah.
actually there was a majority victory and a let's put it, a overwhelming victory for a political party. It gave an extra bit of confidence into the UK, and I think that space will be interesting. Just on that note, what advice are you giving to people about the politics and around capital markets, like in this current environment?
Well, I don't give consumer advice. I'm not involved in advising individuals
Sure.
about their wealth. Um, I think I'm more focused on the debt capital markets and the transition to technology. If you look at the life cycle of a bond, certainly the ones I did, because some bonds you could go to market tomorrow on they're already good to go off EMTN programs and so on. So you have a preamble into structuring it and getting it ready and getting your offering ready and your listing particulars and all of the other condition precedent documentation. And then there's a window, and it's harder than you think to get into the market because so many holidays in Europe, and uh, it's finding a good 2 or 3 days that you can get into your roadshow and price the bond is harder than you think. But that's when the geopolitical politics really comes into focus in a more micro way. So I've had experiences where we're good to go to market, like everything's done and we're launching either tomorrow or the next day. In the case of one client, and we all got up the next day, leading article in the Financial Times was that the client was undertaking a massive restructuring of their business. They neglected to say that, and the investors just disappeared. They panicked again, uncertainty. Um, I've had experience of waking up when there's an earthquake or there's a far right candidate surges in the polls in a European country or whatever, and we call it risk off days. So it's risk on, risk off. If it's risk off, it might last a couple of days, or in the case of the Greek, crisis, it could last much longer than that. So I don't really find myself getting involved in medium to long term strategic advice other than as a kind of backdrop to other conversations. It's always something people want to talk about, but it's more about what's happening in the immediacy of a launch of a debt security or a digital bond. It's the same thing, and that you kind of assess as and when.
Yeah, look, I think it's absolutely fantastic. I suppose, is there any sort of closing notes or anything that you would like to leave the listeners to know a little bit more about yourself, or anything that you think they can leave with a little bit of a golden nugget of knowledge?
I mean, I'm seeing it in finance, but I think it goes for everything. Is set to transform, but not overnight. So you can take different timelines, but we'll have a lot of different ways of doing old business. So in capital markets, you have digital bonds, but you will also have bespoke research, instant analytics. You will have virtual assistants that are quite intelligent and ready to help. There's a company got a big capital raise in New York not long ago that creates a kind of a virtual investment banker. Name escapes me right off, but they're basically juniors, and they'll go and do your spreadsheets and these, I don't know if they're avatars or whatever, and they'll do a lot of the heavy lifting. We're seeing that in legal services as well, big time. And so you'll have a very efficient front end, but just to give some comfort, like one of the high paying jobs in the US, at least, getting, last I looked, six-figure salaries, is prompt engineers. Prompt engineer is somebody who uses the English language to code. Um, uh, you, you know, it's one thing if you're just asking ChatGPT or whatever, like, advise me on how to do this or that. But if you're trying to use virtual assistants and AI to do very complex undertakings that have to be split into a number of sub blocks of work first and then put together at the end, it's really, really important how you instruct it. And a prompt engineer specializes in that. And I did a piece, I did a little blog late last year, which was a little bit tongue in cheek, but a little bit true also, that, you know, eventually you can see that people's jobs will be replaced. Not always. But I was thinking to myself, like, in my old job, hybrid capital, structuring and managing capital solutions teams, if I was to be replaced by an AI solution, who better to program it than me? And I speculated that companies who are making people redundant could actually offer them say a 12-month contract at the end, for which they'd be paid to go now, or take the 12-month contract to program to be the prompt engineer on your old job and design it in a way that would help you. So we can't hold back the tide of change, but for every change there's also opportunities. Now, that's why I mentioned the prompt engineer, because that job didn't exist a couple of years ago, and there will be more. And I think people's general productivity, whatever they're doing, I'm noticing it in my job. I'm a lot more productive in what I do than I was a few years ago, just owing to my ability to do research and analysis far quicker, and get to people quicker, and to communicate in new ways using video technology and creating video clips and all of that. So I would say to stay positive. I think there's a lot changing, but don't panic about it. I think certainly the finance industry will find a way to adapt and stay relevant. And I think final word, say, as the saying goes, it's not AI that will take your job, but someone proficient at AI that might take your job. So stay knowledgeable, keep your learning up, and be part of that transition rather than being overtaken by it.
And if people want to find out more about your services, come and look at you, where's the best place to find you?
www.q4capitaladvisors.com, the letter Q, the number four, capitaladvisors.com, or just research me on LinkedIn, uh, Ronan Donahue. You'll find me there, and that'll also connect to my website. And I'd be delighted to have exploratory chats with anyone, no obligations. I learn from talking to people, even if we don't do business, and hopefully they learn something from me.
Amazing. Thanks so much for joining us. I really appreciate your time.
Okay, Sam, thank you.